Speaking of retail, let's talk about retail earnings season. That officially kicks off today. And boy, do we got a mixed bag of results off the jump here. We're taking a look at Walmart first, posting a big earnings miss for the first quarter, blaming the unusual, quote unquote, unusual economic environment for missing on the bottom line there. Now, despite the unexpected miss and worrying earnings call, the retailer did raise its outlook for sales this year, but cut its profit forecast here. And let's stay on Walmart for a hot second, because we said we could do the entire show on Walmart before we even started here. Yep. And a few things that jumped out, particularly from the earnings call, it's the fact that Walmart is seeing actually higher levels of their costs needing to be passed on to the consumer. But at the same time, that's not necessarily resulting in the ticket prices as well at the end of the day. The average ticket was only up by about 3%. You compare that to the wage growth that we've watched, Walmart's seeing that even more so. You compare that to the inflation, which they talked about on the call. Their inflation, they've seen increases in this, and specifically double-digit inflation increases across grocery, particularly, that's impacting those consumers too.
I could sit here at this desk for another 8 hours and talk about all of the things and map out 97 stories for our returning markets editor, Miles Udland here, off this Walmart quarter, because it's disturbing for many different reasons. Now, I was on that earnings call, and so were you, Brad. Walmart CEO Doug McMillon saying consumers are still spending, but that in the same breath, you had the CFO, Brett Biggs, that is outgoing CFO of the company, former PayPal CFO John Rainey, coming in, but still noting he's seen consumers trade down to private label brands. That is the first time I heard this stuff. So inflation is continuing to be a big problem. And, you know, we've been joking around for the past 2 weeks. O'Brien noting inflationary deli meat, but Walmart noting it too on its conference call. They are seeing consumers trade down to cheaper deli meat and bacon because of inflation. This entire report from Walmart is disturbing, and I'm shocked it is not pressuring the market more than it is.
Well, it is disturbing, but not everything in it is disturbing, in my opinion, because you are getting, to me, the pressure on the bottom line is a combination of people trading down and Walmart itself choosing to hold the line on price, in part because it's being forced
but not for any longer.
Its consumers.
It's not going to happen. It is saying that. But they talked about on this call this morning.
McMillan said price leadership is especially important right now.
It is important, but they did tease. And here's another headline too. Walmart, shopping at Walmart is about to get a lot more expensive. They said a lot more expensive. They said they were going to try to hold the line on opening price point food items, but other categories, at least my interpretation from what McMillan and the CFO said on the call, those price points are going up. If you want a new bike, it's probably going to go up significantly at a Walmart.
Well, okay.
And if it goes up at a Walmart, it's going up at Target too.
Back up. Where are you getting significant? You're talking about big magnitude here. What did they say that indicates to you that there is a big magnitude?
They said they're going to try to hold the line on opening price point foods, but will look for opportunities to push through inflation on consumers.
But they said that the double-digit inflation that they're seeing within the grocery department, they're concerned that that may continue to increase right now. The only place right now that they actually have that perhaps pricing power to actually roll back some of the prices, it seems to be in apparel right now. In terms of what they said on the call, they've said if part of what's driving inventory up is food, and that being inflated right now too.
One more note that maybe is not as negative, although obviously the shares are down. The company did raise its comp sales forecast for the full year. Now, how much of that is because of what they're going to be doing on pricing, how much of it is just because of demand? So their full year comparable sales forecast in constant currency is now 4%. It had been 3%. U.S. comps are going to be up 3.5%. 3% was the prior forecast there. And you have to keep in mind that while Brian Sozzi here is very alarmed at this, Walmart does tend to perform relatively well in a recessionary environment because people do want to save money. So Walmart is in a position where, yes, it's going to take price increases where it can, but in the past we have seen Walmart hold the line and take that margin hit on a lot of different items, but we'll see what that management looks like this time.
And the question is on what type of volume is that on too? Because e-commerce sales, that was a dud in this most recent quarter. That only grew 1%. That's a particular line where they talk about in the past looking for that continuous e-commerce growth to actually sustain how much they're able to get the consumer into other categories, because online purchasing groceries is far different than if you're in a Walmart and walking by those departments. However, online they can at least serve up those other buying opportunities or tandem purchases that somebody may make. So the e-commerce quarter that we saw here, or lack thereof, that's something that, particularly for me, would be alarming.
Another red flag real quick, and I'm going to pat ourselves on the back here. Inventory. We highlighted this yesterday, a thing to watch. Up inventory, up 32% in Walmart's quarter, up 31% in Home Depot. Walmart acknowledging they have to work through inventory to a large degree this quarter. They saw $100 million worth of markdowns in the most recent quarter. And this is not just a Walmart problem. It's likely high inventories at Target, likely high inventories at Macy's. This is a major problem as these companies report earnings in the next 2 weeks.
It sounds like basically they had a pandemic era mindset of getting merchandise in the door while they could, and now they are not moving it out of the door quite as quickly.